Hello and welcome to FinTech Impact. I'm your host, Jason Pereira. Today on the show, I have Gene Natali, CEO and founder of Troutwood. Troutwood's an online platform that helps advisors and enterprises, or basically employers, better connect and financially empower individuals. And with that, here's my interview with Gene. Gene, thanks for taking time today.
Jason, I'm looking forward to it.
So this is our third attempt at doing this. We just always got into the rabbit hole of geeking out over stuff and never ended up getting recorded. So this time, third time's a charm.
And we can talk about how great those past three conversations that weren't recorded were.
They really were. All right. So Gene Natali of Troutwood, tell us about Troutwood.
Troutwood is a financial planning and engagement platform that centers financial experts.
Okay. So we're going to dive into what that means in a minute, but give me the history. How did it come to be?
So I spent almost 2 decades in institutional asset management, working with large state pension funds, plan sponsors, and observed the efficacy that these organizations were able to manage large population participant bases with small staff sizes. Simultaneously, I did some work in the financial literacy space, authoring a book, The Missing Semester, that received some recognition and opened my awareness to the massive gap between an individual in charge of their finances and having a professional team of pension fund administrators doing it for you. And those two experiences served as the inspiration for Troutwood.
Okay. All right. You saw firsthand what scale and professionalism an organization bring to a problem. Let's just say that much. Okay. So talk to me about the problem you sought out. Define the problem you were trying to solve with Troutwood.
Sleep at night. That was, Jason, I started in institutional asset management right out of college, but it wasn't until my early 30s to mid 30s I became more aware of the gap in society when folks, independent of two things, independent of their level of wealth and independent of their education, were living paycheck to paycheck. And that wasn't including savings. So they were living paycheck to paycheck while treading water, not building a future. It was because they weren't taught. It was because of unawareness and a handful of other mechanisms.
That is the challenge. Let's talk about how you chose to attack that challenge.
The reason that we build a planning and engagement platform, and I'll pick a great organization, the State of Hawaii Employees Retirement System.
Okay.
Manages pension funds, which is a source of income for life for firefighters, police officers, state workers. And in the intro, we talked about small staff size managing large participant bases. We didn't talk about the inherent built-in benefits of the pension fund. You know, if you stuck around, i.e., you were incentivized with more money in retirement. Very simple. Work longer, get paid more in retirement. There were mechanisms that pension funds used to engage with, to support, to inform their people what they had, and more importantly, what they would have in the future. Jason, now you and I live in finance. If we step back and were to pull, you mentioned employers, what if we pulled any workforce of non-finance professionals? Randomly, what do you think you'll have in a year, 10 years, 20 years?
Oof, we'll have a massive disparity of outcome, a very broad range of outcomes that unfortunately will likely polarize around extremely high or extremely low based on the confidence in the individual.
Yeah. For the same reason, what if a lightning bolt struck the computer right now and you and I had to be experts on painting beautiful pictures?
Well, if you wanted to find a beautiful picture as a very crooked smiley face, I am your, all right. And I don't even think I could prompt AI to do a proper view. That's how bad it is.
But that's the position we put individuals in financially, right? We don't give them the expertise or the know-how. We push them into a system where we say, be a great nurse, be a great doctor, be a great engineer or a great teacher. And by the way, hope this financial piece works out for you.
Yep. Part of that is routed in the origins of the retirement system, right? Like the original first state pensions were the first thing, right? So actually, let's go back further than that. Pensions originated because they were like, 65, you're going to be decrepit. You can't possibly work. The state's got to do something for you. So it was like, you've worked so long that you possibly can't work. So therefore, here's money. Then, so it was taken care of by the man behind the curtain. Pay no attention. Then when private sector pensions came about, they mimicked that. And it was all basically defined benefit, right? So the deal to be made was effectively, you work for this employer for a long period of time. We're going to take care, you're also going to take care of your retirement. And that's how the pension is going to work. And pay no attention to the man behind the curtain. And then the shift happened over to defined contribution. And society, and that really was like an 80s phenomenon. And even though it's been around for a while, society has not really fully coped with the downloading of the cognitive burden that it has put on the consumer or the saver in order to properly take control of it. So yes, it sounds very nice that you're empowering people with the retirement, giving them agency over whatever. That didn't come with education.
Yeah. Well, Jason, it's a twofold reason. When the private sector tried introducing the pension fund, the part they were not prepared to quote unquote mimic was the liability side, right?
Correct.
Oh, I just had a down year in my business paired with a down year in the stock market, and my liability rose.
Yep.
And it's a promise I have to fulfill despite not having the capital to fulfill, or a population base I can tax to make up the deficit.
And they were all based on the old population pyramids of yesteryear, which were literally looking like pyramids. When they started to flatten out and you had fewer working employees for every retired employee, the math started to break down pretty quickly.
100%. And what did we do around that? We did not empower the industry or the individual.
Mm-hmm.
I love drawing parallels. What if instead of that, the bad painting analogy I gave earlier, you and I had to become dentists tomorrow? What if our patients didn't know we weren't dentists? Be a train wreck, Jason.
It wouldn't last beyond the first patient.
It wouldn't. We were not qualified.
It's be like, just brush. I'm not going to touch you. That's me handling the life. But actually, you know what? That's funny because you know what I just said? There's actually a metaphor right there. That's exactly how the pensions worked, right? It's just like, oh, here you go. Not my problem anymore. Not my problem anymore. So it's almost a delegation of duty that came with the loss of professionalism, right? And then we replaced it with the likes of ERISA, where it says, okay, you have to provide good options. So thanks for providing good options. Doesn't mean I didn't know what to do about the good options. And then we've had some innovation along the lines of target date funds and fixing defaults, but still puts a lot of onus on the individual. And it only deals with the narrow vector of investing.
Yeah. I love that you just said that, by the way, because that is not talked about often enough. The decisions that give you the money to invest are far more important most of the time than the investment decision, right?
Yep.
Tesla versus Microsoft pales in comparison to investing versus not investing.
0 to 1 is a lot more important than trying to go from 1 to 2. So basically, we have this issue. We have this issue where basically the end user or the end consumer has been downloaded the responsibility for their own financial welfare and retirement. You already see the data on how difficult it is for many of them to just live paycheck to paycheck. So we expect them to balance the today and the tomorrow. And we know psychologically, hyperbolic discounting, people do not necessarily relate to their future selves the way they should. And it's really hard to sacrifice today for someone, a version of you in the future that you don't understand or see or fully, and you think, and it's very far off, right? So how do you tackle this problem? What have you done to tackle the problem?
It has to go through experts. It has to go through enterprises or experts. When we pulled the pension fund, we didn't say, go to Jason, go to your local financial advisor, go here for help. We literally said, good luck.
Don't let the door hit you on the way out.
Yeah, the result is we have a $14 trillion retirement deficit here in the U.S. That's just to pay the bills, not to buy beach homes. The answer's kind of written on the wall. The reason that we build a platform is, my opinion, that we will more quickly solve this problem through enterprises and experts. If we equip employers, financial advisors, and financial institutions with the tools to manage such a large population size, that's how we quickly reposition this as an offensive play versus a defensive play.
Yep. Okay. And you built a tool, a collaboration platform to help put them on the same page. Care to take me through the experience? And let's actually do this from the viewpoint of the client to start first. I am a client who basically is going to receive service from a professional on your platform. What does my experience look like?
It's a two-way connected platform. So let's first walk through a financial advisor use case. Right now, for many financial advisors, the conversation is one way, either customer to advisor or advisor to customer. The customer says to the advisor, hey, I'd really like to be involved in this journey, as opposed to bringing you physical statements once a quarter or sharing you a download of my budget. Could we follow together real time? There's very limited software to do that. So Troutwood built the connectivity that lets an individual live their budget, give an advisor permission to follow, do their job to the best of their ability. Simultaneously, advisors run projections, guidance, milestones for their customer base to date also. Hey, let me create a beautiful report and present it to you in a meeting. What if there was two-way connectivity there as well? So the client could respond, Jason, why are you increasing my savings rate, or why are you decreasing my savings rate, et cetera. So the two-way connectivity was part one, Jason, but the second and equally important was pass through. Advisors work with a limited number of households because time is their greatest commodity as well, just like with investing. What if we could take that technology, that engagement, that guidance, and the expertise and pass it through to the business, the commercial customer base of these same financial advisors and financial institutions? That's, in my opinion, how we take the financial industry and put it at the center of this conversation. Say, hey, we've got the training, we've got the expertise, and now we have the modern technology to scale our expertise. Preface.
Okay.
Gene's
So, yeah, of course. I will say that it's interesting. The people who listen to this podcast have heard me talk about this and how, end of the day, there's a cognitive burden and there's a cognitive limitation, how many relationships we can handle. And that for a really deep financial planning engagement, you're not going to be able to scale that. Like people, if you want a relationship with an advisor where you pick up the phone and they know your kid's first name and that kid is about to go to X university, that is something that is only affordable to people at a certain threshold. And because to pay for those hours requires a lot of assets. But that the mass market, not to say what you build can't benefit that market, absolutely can. But the mass market to date has largely used similar tools to what the upscale market has done and had a hard time getting on the same page. So you talked about the connectivity, right? So first off, the importance of data gathering and just basically being able to see, putting us on the same page, right? Like actually being able to share the same data set so that the consumer can see the same thing the advisor is seeing is empowering, because now we're at least talking about the same thing, right? But then giving them a conduit for how they're going to get the work done, that's something else. Talk to me about, besides the fact that they get on the same page and they can see the data about what's going on, what is the advisor able to enact on behalf of the client, or at least guide them through on your platform?
Connectivity plus data gathering equals targeted and effective messaging and engagement. And I think that the medium should be multimodal, right? If your customer prefers text message, don't send them an email. If they prefer email, don't send them a text message. Meeting folks where they are. And that's what software will enable. That doesn't have to be a scroll through an Excel spreadsheet, control F to find what we're looking for. No, that can be drawn now with smart insights and immediate action steps.
Yep. Yeah. And to date, it's largely been interfaces built around, in most cases, with the exception of some of the larger all-in-one platforms or financial planning software, stuff that are largely based around just, what is my balance? What am I actually, the average retirement experience is, oh, okay, I get to check in on how much I have there and then what I'm holding. Very much about the product, not about the purpose. So by putting everybody on the same page with the same data, you're able to bring the purpose to the product.
Yes. 100%. Advisor to customer meetings can be about measuring the delta or the difference that results from decision making, not just investment decisions. A couple of things have happened over the last 2 decades. One, probably the greatest innovation is accessibility. I don't think we talk often enough about the impact fractional shares has had on large populations. Didn't have a minimum dollar amount to buy a mutual fund. So the door is open. Why are folks not running through it? Not everyone grew up with a Wall Street Journal on the dining room table, as we both know, Jason. And when that's not the case, people don't sprint to open doors. So accessibility has been solved. The education, the engagement, the incentivization has not yet been.
And it also presumes that the incentives, the motivation, the fear of the unknown has been dealt with. And frankly, show me someone who doesn't say they're busy with their time. The reality is everybody lives a quote unquote busy life. Like we can gauge against each other as to who's doing more. It doesn't really matter. But the reality is that most people find the time that they're willing to do things, they find ways to fill that, right? And basically, if it wasn't a priority before, getting them to carve out and make that time a priority now involves behavior change. And behavior change ain't easy.
Our friend Brian Portnoy can speak to that. And my wife would say I'm stubborn. I would say I'm passionate. And they'd both mean the same thing, probably, Jason.
There are two sides of the same coin.
Jason, when you mentioned time, I like to have conversations in different settings. And my family doctor, we talk business after that annual checkup once a year. And this year, when I was in for my annual Is Gene Healthy appointment, I asked how many households he worked with. was curious because he does a great job. He's a great doctor. He said, Gene, I work with 5,000 households.
Oh my God.
He keeps me healthy, right?
Yep.
Text message or a phone call away if I need help. But I said, are you able to manage that? Was my follow-up. He said, Gene, the honest answer is 3,000 is probably the sweet spot. 5,000 stretches us. And that's just he as an individual. It's not his practice. That's just him. 5,000 stretches me versus 3,000. So Gene, one of the things we're exploring as a hospital system is a concierge service. Our healthier members don't need to see us more than once a year.
Mhm.
But we do have folks that need more personalized attention. And I think you're probably catching the analogy right there, Jason, right? But when we think of ways that the industry can scale, look at the folks that you and I know, their expertise, their PhDs, CFPs, CFAs, Masters of Finance.
So you're hitting upon something that I long lamented and complained about. And it's like when people talk about, what it is to service this smaller client, right? And how it's economically not feasible and then that leads to justifications of certain high fee products and commission products or whatever the heck it is in order to justify it. And my response is almost always universally, okay, but that's because you're trying to apply the model that works at the mass affluent down to the mass market. And the reality is that, no, you're wrong. You have to come up with a different delivery mechanism. The problem is that you're out there trying to sell steak to everybody when some of these people, all they need is hamburger, right? So frankly, like what I like about what you've done in particular is that your platform starts out, I think, very mass market. It does enable people at mass affluent and higher levels, absolutely. But by putting people on the same page, giving them tools for collaboration, for giving them tools to nudge them along, gamification, all of that, giving them an all-encompassing like platform for, I'd say, the core needs of financial advice, not going into esoteric things necessarily. Like I'm sure you don't get into 57 different types of trust. The reality is that you're not worried about what happens to the people at 10 million. You're worried what happens to the people starting out at 10,000, right? Get them to where they need to be. And you've developed a system, and where the real industry is failing is largely been the failure to adapt its model to service clients at a lower level, basically at a reasonable level, at a successful level. And people push back on this with me. My response is, you don't believe in capitalism? Like at the end of the day, like if you think it's got to be one way, you have an audience that has a need and a willingness to pay, but the clearing price is X. Figure out a business model that works at X, right? Just like your doctor basically said, we're going to concierge medicine this thing. And basically, hey, you meet with us once a year and you're all green lights. Hey, guess what? You got to come back for 12 months. Congratulations, you did the right thing. Your reward is not having to see me for 12 months. And then basically the ones who do need it, hopefully get much more attention to hopefully make them become one of those. The goal of this industry should be to develop models to basically move people along a chain or a path to go from mass market to mass affluent to high net worth, as opposed to lamenting the fact that they can't make the same kind of money off the kids that they make off the parents.
And Jason, that door is open now. I'm going to draw an analogy following what you just said, then share a way to open the door even further. What if the only way to see your doctor was if you agreed to have a colonoscopy every year? Think of the absurdity of that at 18, 19, 20. But that ain't
happening every year, man.
But to your point of not selling everyone's steak versus a hamburger, right? Like life, we evolve. At 22, our financial picture tends to, at the time, we don't realize it, but boy, it's a heck of a lot simpler than it is at 32, 42, and 52 as our obligations grow. So how do we give the tool to the expert to do this, Jason? I'm extremely proud of our platform because it could onboard any population size, boom, at governmental level, at a pension level, at an enterprise level. But what it does is it does through a pyramid structure, putting the enterprise at the top. Because like you just said, the decisions are easy for 22, 25. We can grab those, bring them into the ecosystem, start to build two things, trust and brand recognition, both really important things in finance, while effectively guiding that individual to the levels for that, let's call it the concierge service or the higher level of standard of the practice. I get very excited by that because I think, Jason, of what happens if the industry doesn't step up. To me, that is a terrifying outcome. If living and breathing in software, if the financial experts aren't willing to stand on the podium they've earned, I'm fearful for what happens as the consumer-facing apps continue their messaging of, you've been ignored or you weren't taught. Come to us.
Yeah. I had an interesting conversation today. I was at lunch with a friend of mine who's a bankruptcy trustee, and he's starting to see an interesting trend for anyone under 35. And that's, they are all coming to him with gambling debt. They are all coming to him.
Wow.
So a combination of it. He says gambling debt or investing masquerading as gambling. So gambling debt, because online gambling is taken off like crazy. Well, app-based online gambling is taken off like crazy. And in addition to that, you got crypto speculation, where these guys have got them blown up and their faces ripped off, and they did it with debt. And then the last piece of this is now the predictive markets, right? Which you listen to the Robinhoods of the world trying to bring in predictive markets into the investing, and you're convoluting rampant speculation and gambling with investing. So like, the reality is that, yes, these the bigger the point I'm getting to is these online platforms, let's just face it, I think they've demonstrated they don't have what's your best interest at heart. The entire GameStop fiasco, Robinhood metrics on how successful or poor people are doing, it's not good. I have seen some of these like free trading online platforms and the actual studies based off the results on how these people have done, and it's horrific, right? So you're absolutely right. Unfortunately,
But Jason, they're not bound to the same standards that you and the financial advisor industry is, where that has to be shared.
they're just handing you the rope to either pull yourself up or tie around your own neck. Unfortunately, people think that tying around their own neck is actually the solution because that's what they're told to do. So yes, we've already failed. We've already failed in failing to have licensed people who know what they're doing talk about basic. I see online debates about what form of fees, what level of fees is appropriate versus creating. That's what we're spending our time doing, as opposed to becoming the finfluencers, like the people, the trusted sources that people turn to learn, and then utilize these platforms for good as opposed to bad, because you can't, because their incentives are not your incentives. They're as much as like they would technically benefit from long-term investing and savings and making everybody wealthy. They benefit. They got a 3-month window every 3 months to hit Wall Street targets. So let's face it, their incentive is very short-term.
Brian Binder put out a great piece, Not Financial Advice, that summarizes a lot of this, the finfluencer market, right? Because if your base knowledge is zero, how can you determine the expert from the non-expert
Especially when that expert works at a major institution that proved they couldn't be trusted in the great financial crisis. And now, but the finfluencer's got 1 million followers.
Yep. And it's great with the camera.
Oh, it's great with the camera. And we're having this conversation shortly after Mr. Beast announces that he's launching his own challenger bank. Like, I will put money on if this works. The next thing he's doing is he's going to open up an investment arm and talk about the most trusted guy in. You know what? I'm not going to judge. I'm going to hope that they do the right thing and they do it the right way. The reality is that investing done right, as you know, is boring. And that is something that is problematic for all these platforms. So and without someone involved to remind you this and of this and make sure they're doing the right things, it is very easy to succumb to the temptation to do the wrong thing. I am friends with guys who started the largest robo-advisor in this country. And I remember they said the top 2 reasons we would lose money were basically people buying houses, fine, and it was too boring, right? No one cared about the balanced portfolio's reasonable return when they were hearing people YOLO, make money off of whatever the heck it was on the day. So yes, we failed, but the reality is that the advisory market of the next generation is one who's got to bridge this gap. It's not the one who's going to basically be cold calling for boomers. It's the one who's going to be able to meet these people where they are and provide sound advice on multiple platforms where they are that actually demonstrate value beyond just trading.
Yes. And Jason, what is Mr. Beast responding to? Society really holding a big flag saying, help.
Basically.
I'm living paycheck to paycheck. I don't have $400 to my name. My retirement savings are near zero. Help.
All right. So in the end, let's come back to your platforms as we're talking about. You built an online platform, data comes in, advisors are able to see and action it. They're able to advise them. They're able to then basically help push and gamify some of the stuff classically could be done. But one of the things we haven't touched upon that I do want to touch upon was how you're aggregating the data for the advisors, right? One of the things that I found very impressive was you're looking at things like basically whatever data you can on what's actually happening with the client to help direct.
Mm-hmm.
I'm going to use the term next best action, but the next best client to reach out to based off of their actual underlying data need. Instead of wondering what's happening, you're monitoring for change, you're monitoring for situation, and you're basically trying to nudge people to say, yeah, probably should reach out to this person because something's going on.
Absolutely. And that can go to a positive and negative. They hit a positive threshold, it's time to reach out, or they had a negative event occur. So now that the data aggregation was difficult to build, but is extremely customizable. You can aggregate by line item in a budget. You can aggregate by number of pets. To your point earlier about the phone call, if that matters to your customer base, if they have 3 cats and might get a 4th. You can data threshold on debt to equity ratio and spend out. That's the power of a very agile back-end technology in the hands of an expert.
Yep.
And by expert, I mean you, the industry.
No, the ability to basically harvest that data and try to figure out where the opportunities are and where the actions need to be taken. Absolutely. So before we wrap up, Gene, there's 3 questions I'd like to ask everybody to end on a positive note. First one is, if you had one wish for something you could change in your company or the industry as a whole, what would it be?
I wish we didn't have to play catch up as a financial services industry.
So let's pull on that a little bit. What do you mean by that?
More Americans have white teeth in retirement savings because everyone has access to a dentist. Everyone has access to a doctor. Everyone should have access to a financial professional.
Yep. Fair enough. We are playing catch up, but I will also say that on some level, it's understandable because, look, financial planning is still a very young profession. I won't even say it's fully a profession because we're still missing some of the hallmarks of a profession, but we're getting there. And accountants, lawyers, doctors have all had thousands of years to work out their mechanisms and support systems and you name it and awareness. We haven't. And I will say, though, having the perspective of coming out from outside the US and looking in, you guys have hit this interesting flywheel where awareness is there, creating demand, creating people coming into the industry, creating more people taking this as a subject in university. Like the number of undergraduate degrees you can get into financial planning, let alone graduate, let alone PhD degrees in financial planning. That's a non-existent thing in other countries. So the ecosystem is being built up largely based off of this beautiful flywheel of understanding and demand seeking and people just basically coming into it. And not only that, I mean, there's also the unique combination of American individualism creating the underlying lack of support systems, but same opportunity to actually give people the ability to quote unquote pull themselves up by their bootstraps, but they need help to do that.
Well said, Jason.
Yep. Second question. What's been the biggest challenge getting the company to where it is today?
Writing every line of code. We had the opinion.
You haven't vibe coded the entire thing? What are you talking about?
We didn't vibe code and we didn't outsource. And that was by design because it A, built a very strong foundation, and B, allows for a level of agility we would not have as a company if we had outsourced.
And no one's going to care about your code the way you and your employees are. That's for real. Last question for you. What excites you about what it is you're working on and keeps you getting up in the morning to fight the good fight?
I believe Troutwood is the platform that will narrow the wealth gap and create that opportunity at scale to give financial empowerment to individuals independent of their level of wealth or the zip code they live in. And that excites me to the end of the earth, Jason.
Bottom line is, I have no doubt that you're going to make some positive impact. I hope you make as much positive impact as possible because it is a noble pursuit and people could definitely use the help. Gene, thank you so much for taking the time.
Jason, thank you. I enjoyed this.
So that was my interview with Gene Natali of Troutwood. I think we ended up getting into one of our classic conversations more so about the entire industry than focusing on his technology, but honestly, his technology is quite impressive. And if you're looking to up your game in terms of how you manage your clients and basically deliver greater value, especially at scale, I would highly suggest you take a look and schedule a demo. As always, if you enjoyed this podcast, please review on Apple Podcasts, SoundCloud, Spotify, or wherever it is you get your podcasts. Until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.ca.